I'm Jamie Leach, the chapter lead of FDATA in Australia and New Zealand. As a reform banker and a data and technology professional, I've been actively working with our federal government, the regulators, the Treasury Department, the data standards body, and of course industry in designing and implementing a local version of open banking called the Consumer Data Right. I am a passionate data champion, and the ability to actively share data, both historical and in real time, will enhance the customer experience and improve the performance of active participants' products and services. This is paramount to leveraging the economic potential of our data. Even though banking is just one sector, the lack of physical assets, coupled with Australia's motivation for financial services reform, makes banking front and centre as the logical starting point for the consumer data right in Australia. To understand where Australia is going, you need to understand where our open banking and consumer data right has come from. Open banking's evolution and the associated framework for data sharing within the Australian ecosystem have been slow to develop. The motivation to share private data would not gain momentum had it not been for a series of commissions, inquiries, and reviews held between 2014 to 2021. In 2014, the government's Financial Systems Inquiry, the Murray Inquiry, recommended better data access. In 2015, Competition Policy Review, the Harper Review, the 2016 review of the 4 major banks, the Coleman Report, and the 2017 Productivity Commissioner's Data Availability and Use Report made similar recommendations about the data sharing economy. Each review into financial services had a different scope and focus, but the conclusions were broadly consistent. As noted in the Coleman Report, Australians should be able to trust that their bank will act in their best interests, but the major banks have significant market power. Following the 2017 Open Banking Review led by Scott Farrell, commissioned by the then Treasurer and current Prime Minister Scott Morrison, the Farrell Review, Farrell was instructed to make recommendations concerning the most suitable model of open banking for the country. The Farrell Review conducted its work concurrently with the Royal Commission into Misconduct in the Banking, Superannuation and Financial Services Industry, the Hayne Commission. While its scope was broader, the Hayne Commission also noted the imbalance of power between financial institutions and consumers, specifically a lack of practical choice for banking products and services. At the end of 2017, the Australian federal government announced the CDR's introduction to require sharing information in a safe, efficient and convenient manner. Some consider a timeline of 2 years between the Farrell Review's final report and legislative adoption at the end of 2019 to be remarkably short for the passage of legislation intended to bring about significant change. So why is open banking in Australia unique? While other jurisdictions were adopting various forms of open banking, Australia pursued a distinctive course in adoption, an open data regime. In the global context, the Australian evolution of open banking is particular for 3 primary reasons. Firstly, the government plans to apply the Consumer Data Rights open data sharing requirements economy-wide, beginning with the banking sector, progressing to energy providers and telecommunications companies before insurance and superannuation are added. Secondly, unlike the United Kingdom and European regimes, the Australian Consumer Data Right will provide for read-only capability initially, meaning the data recipient can only access data for information gathering purposes. More importantly, in conceiving a broader open data regime, the Australian government reviews the right to open data sharing as an intangible property right, a choice in action. They proposed accordingly a consent right, which is a right to give instructions about how one's data is collected, stored, and used. This approach has flow-on impacts on other possible rights, such as the right to privacy and the right to be forgotten. With the legislation finalised, The responsibility for open banking falls upon 3 teams. The Office of the Australian Information Commission is responsible for the privacy and consent frameworks. Our Treasury Department for the creation and finalisation of policy and rules frameworks. This department also houses the technical specifications and implementation standards teams. And lastly, the Australian Competition and Consumer Commission will retain oversight for accreditation, compliance and enforcement, and education and public awareness campaigns. 4 principles guide Australia's consumer data right. The CDR should be consumer focused. It should be for the consumer, be about the consumer, and be seen from the consumer's perspective. The CDR should encourage competition. It should seek to increase competition for products and services available to consumers to make better choices. The CDR should create opportunities. It should provide a framework for which new ideas and business can emerge and grow, establishing a vibrant and creative data sector that supports better services enhanced by personalised data. The CDR should be efficient and fair. It should be implemented with security and privacy in mind so that it is sustainable and fair without being more complex or costly than needed. These principles align with the 4 core principles of CDR: consumer, choice, connectivity, and confidence. So what is open banking data in Australia? The designation instrument for the banking sector specifies the following classes of information as CDR data. Information about the consumer or their associate, for example, contact details. Information about the use of a product by a consumer or their associate, for example, transaction data. And information about a product, for example, terms and conditions. The definition of CDR data is broad. It includes data that has been wholly or partly derived from data set out in the designation instrument, and data derived from any previously derived data, for example, screen-scraped data. With open banking rules stating that only those entities authorised or accredited to participate be able to request or share data, there are 3 main categories of participant. The authorised deposit institutes. Authorised deposit-taking institutions have the meaning given by the Banking Act of 1959. This category can be separated into 2 classes, major banks, of which there are 4, and non-majors, currently at 92. These include Tier 2 banks, regional and rural banks, building societies and credit unions. The accredited data holders. A data holder is a business that holds consumer data and must transfer that data to an accredited data recipient at the consumer's request. Accredited data holders may be intermediaries, aggregators, banks, or data houses. Their classification is reliant on the role that they play in the sharing of the data. And accredited data recipients. Generally, an accredited person is accredited to collect appropriately consented CDR data and is listed on the accreditation register. An accredited person can be either an ADR, which may have or not yet received CDR data, or a data holder, for example, a bank accredited to collect CDR data from other data holders. But banking data is complex, and Australia's banking data is no different. Let's face it, there are many different types of customers and many more different types of accounts, products, and services. Open banking is being separated into phases and stages to assist with this implementation process. Data is being separated into 3 phases and 2-stage timelines. The 3 phases will list the types of accounts and account data that must be shared. And the 2-stage timelines will separate consumer data sharing from product reference data sharing, and then major bank compliance deadlines and the non-major bank compliance deadlines. So the types of accounts that phase 1 includes are savings accounts, call accounts, term deposits and current accounts, check accounts, debit card accounts, transaction accounts, personal basis accounts, GST or tax accounts, personal credit or charge card accounts, and business credit or charge card accounts. Account types for phase 2 include residential home loans, investment property loans, mortgage offset accounts, and personal loans. And the last phase, phase 3, which is yet to be launched in Australia, will include overdrafts, both personal and business finance, investment loans, lines of credit, both personal and business, asset finance, cash management accounts, farm management accounts, pensioner deeming accounts, retirement savings accounts, trust accounts, foreign currency accounts, and lastly, consumer leases. You can see from this graphic in the consumer data sharing timelines that the categories of major ADIs, or authorised deposit institutes, and non-major ADIs have been separated. There is also mention of reciprocal data holders, and these are the accredited data holders that, through the inclusion of reciprocity, must cycle data back to the banks if requested and consented by the consumer. Phase 1 for the major ADIs needs to be met for consumer data by the 1st of July 2020. Phase 2, 1st of November 2020, and Phase 3, 1st of Feb 2021. The non-major ADIs, Phase 1 was the 1st of July 2021, Phase 2 will be the 1st of November 2021, and Phase 3 finally on the 1st of February 2022. The reciprocal data holders, Phase 1 March 2021, and Phase 2 and 3 July 2021. There has been a delay in those types of accounts that deal with joint account holders that was meant to come into play on the 1st of November 2021, and at this stage there is no date for when that portion will be enforced. And like the consumer data, the timelines for product reference data is separated between the major ADIs and non-major ADIs, with the major ADIs being expected to deliver phases 1 and 2 by the 1st of Feb 2020 and phase 3 by the 1st of July 2020. Non-major ADIs were to deliver phase 1 by the 1st of October 2020, phase 2 by the 1st of February 2021, and phase 3 by the 1st of July 2021. So is Australia on track to deliver open banking? This is a simple question, but with a very complex answer. If we were to consider the intricate components, and we can separate them into categories. Legislation. Yes, this was completed in 2019. Technical specifications. Completed, but under ongoing review and finalisation in line with the updated rules and policies. The implementation standards. Ongoing, as each new component is considered and finalised. The rules and policies. Well, version 2 of the rules were released for consultation in late 2020. This version had already been amended twice, and the latest set of rules were told are due imminently. The delay in finalisation has led to the majority of the market adopting a watch and wait approach, with some entities still unable to even classify themselves, therefore unable to apply for accreditation, as only accredited and authorised parties may request and receive data. The ability for multiple accreditation models of data recipients is proving difficult to finalise. For example, accountants, bookkeepers or mortgage brokers, accounting applications, plugins and marketplaces, and some of the technical providers. Mandated timelines. Well, the timelines have been formally delayed on at least 3 occasions, with a recent announcement made over joint account introduction being pushed back and undergoing further consultation. All 4 of the major banks have a rectification schedule, with no current ADIs having achieved full data sharing status. In addition, a number of the non-major banks have been granted exemptions from their mandated inclusion timelines. Accreditation. The accreditation process is optional, with 5 accredited data holders, all of them banks, 4 of them the mandated major banks, and 1 a voluntary inclusion. 6 active accredited data recipients and 3 accredited data recipients yet to finalise their offerings. There are currently 70 ADR applications undergoing completion, with a percentage of them in their initial stages. Compliance and enforcement. The activities of compliance and enforcement have not formally commenced as yet. Public awareness and education. This is yet to begin. The Treasury Department have now commenced rules development and formal consultation on subsequent sectors such as the energy sector. It's important to remember that banking was always meant to be just one sector of an economy-wide data sharing framework. Initially, banking is being introduced as read-only. We're expecting to see the right access or action initiation to follow soon afterwards. The consultation on the energy sector and the recommended peer-to-peer model has already commenced. This will be closely followed by data sharing in the telecommunications sector, and then more traditional inclusions of open finance, such as insurance, and Australia's version of retirement superannuation will soon follow. From there, where could the economy-wide data sharing framework go? The options are endless. FDATA Australia and New Zealand and our members remain positive about realising the true potential for open banking. We support our federal government, the regulators, the Treasury Department and their teams in their quest to introduce open banking and as they bring further sectors into the consumer data right. The potential to enhance the customer experience is substantial, and I cannot wait to see cutting-edge technology enabling data-driven decisions in real time for both consumers and businesses alike. At the point that right access or action initiation is introduced, we expect to see a supercharged landscape with an explosion of use cases and experiences. But some of the market would consider the introduction of action initiation to be a mark and a milestone of success for the consumer data right. Australia has come so far, and we are almost there in delivering open banking. With the support of the market, I am excited to see the transformative potential that this evolution will have on all of our lives.